Hey guys, Lancer here. Hope everyone's doing well. Thanks for joining me to look into a different kind of video. Specifically for this one, I am mostly going to be talking about the markets. Once again, going back to the fact that anything that happens in the markets can be taken outside of that context and used in everything else that applies for money, I guess, in some ways. It's all about the wealth effect. It's about how much money you're making, how well the companies are doing. So, what am I talking about? And why is it so important? If we look at the graph, the trend that we can see right now on the charts, we can see that the S&P 500, which is the largest index in the world, US based, has had a massive downshift from the 3rd of January 2022 and has constantly hit this resistance line every single time. Now, this resistance line is actually stronger than the 200-day moving average and the downward moving average, the 50-day weekly average, and the 200-week average as well. Now, the 200-week average gave a massive bounce on the 10th of October 2022, and it has gone to a very high level right now. So if we go from the bottom of that to the top as it is right now, we've gone up almost 18%. But if we look at the previous rally, we went up by about 19%, and so on and so forth. So we've had the bounce like this before. Now, what happened in the last couple of days, especially from the Federal Reserve and I guess the chair, Jerome Powell, is they've come out and said, we know the effects are going to take some time to come into the markets, and we're going to try to take it easy on interest rates. And that is very important to remember, because if they're going to take it easy in any way, the markets can go, oh, that means they're being loose with the monetary policy. There's going to be more easy money, which means asset prices and cards will go up in value. Now, at the end of this, I'll cover exactly what kind of market we can expect if this happens. But what the if is if this bar finishes above the white line by the end of the day, and or next week we get a bounce above this line, we are going to be seriously considering that we're going to be entering a new bull market where the market has a more chance of going up than down. If the market pulls back aggressively in the week coming up, or today pulls back aggressively, and then next week, Monday, it obviously pulls back a bit more, that means that we are about to retest the 200-week moving average, which is another 11% down. Now, I mean, they can also make higher highs on the weekly, but it's very important to remember that a trend hasn't been broken. There's a much higher chance of the markets following through and dropping. Now, another thing to remember is in a short term, the 200-day moving average, which has not been broken since 6th of April 2022, is now broken, and it's about to get retested. In fact, I think last night it got retested in the US market. With all of that happening, there is a chance that we could end up above this line today. I'm going to release this video as soon as possible because I actually think this is important for people to keep an eye on. I'll be sleeping, so I assume other people can keep an eye on. But if it does break above this, then we have some serious movement, change of trend, change of momentum in the chart that we haven't seen for almost 8 months now. And we're going to have to figure out where that's coming from. It could be the fact that a recession is happening and the markets are cheering for good news is bad news. Bad news is good news for the markets. Or it could be the chance that we get a massive pullback at the end of this day going into the weekend, and we're going to see this entire momentum continue on downwards, and who knows where that will end, especially if it breaks that weekly 200 weekly moving average that we saw in the previous graph. Another thing to remember is the dollar has broken down under the 200-day moving average. I remember saying that this is a very strong resistance. It did bounce off it once, but it fell through quite easily after that. Gold is once again bouncing off the 200-day moving average, and that's very interesting to see, especially since it still can't capture 1,800, but it's holding out above the 200. So that's a very thin margin. If it can go about 1,800 I'll be a bit more confident. But if it's stuck in this range, then it's a bit more of a false breakout in my mind. But gold and S&P 500 behaving the same, also quite strange. Very, very interesting. The next thing to do is look at what can cause any changes, any unexpected things to happen. And it is this non-farm payrolls for the US on, well, tonight at 1:30, I guess that's PM, whatever US time setup is. I'll be asleep at that point. But the forecast is 200,000 jobs, I think, and the previous was 261,000 jobs. And the actual is going to really determine what the markets are going to do. If the number is larger than the forecast, I'm expecting a large drop in the market, especially based on the large number. If the number is smaller, the market might have already priced in a lot of it, but that also means that it'll keep this momentum shift. So it's very important to remember that the reason why so many currencies are getting stronger against the US dollar is because they think the Federal Reserve has tightened ahead of everyone else, and everyone else is going to soon follow through over the next couple of months themselves. And we're just going to kind of let it sit around the rate that it currently is, or just a bit higher, and then pause, with inflation still running above the interest rate, which means that if you have money in your bank account, you're in negative rates. I have money in the bank account because they're getting 4.3, almost 4.5% interest, and that is safe and no need to take any chances. But just a heads up that they are still losing money. You're just losing money slower. It's unfortunate to think about it, but that is the way that the system is built right now, which is why people look for ways to get more interest on their, I guess everything. Anyways, guys, if you like these kinds of videos, please like and subscribe. I'm going to continue now. So the dollar, the AUD to USD, I'm expecting that to not get much stronger. There is a massive resistance above the Australian 200-day moving average, which is a problem because I don't really want the Australian dollar to get get weaker, because that's obviously bad for Australia. Our inflation rate will pick up because of that. But if the US dollar keeps falling, then we need to know why. Is it because it's a recession, or is it because the Federal Reserve has chickened out? And yet we have not confirmed exactly what is going on. Another one is 13th and 14th of December, the Federal Reserve is going to have their meeting, and they're going to have their next interest rates and then a couple of sentences from Jerome Powell. Very, very market moving. So 13th, 14th, check that out. The next one, last, how can investors benefit from a bull market? And a bull market is a period of time where the financial markets, where the price of the asset or security rises continuously. Commonly accepted definition of bull market is when the stocks rise by 20% after two declines of 20% each. And what have we got recently? We have got two declines, legit, two, maybe even three declines, but certainly two declines of 20%. Sorry, my thing's going a bit wonky. So that's top to bottom on this side, 20%, and top to bottom, not 20, 19.616%. So, what are you going to give me? So we have had two dips of more than around 20%, and now we have almost got a 20% gain on the S&P balance. If it gets that other 3%, we're in a bull market, and that is crazy to think about in a market like this. But there you go. If I guess enough people get fired, the markets just love it. Anyways, guys, sorry, that's just some cleaning truck out there. So that's an interesting way to think about it. If the market does go bullish, then I wouldn't go all in, but I certainly would start investing in a lot of things that we've kind of, at least I've been holding off on. And moving in cash is good, but at some point when the bull market takes off and it's been confirmed, you really want to get in and try to get some good deals before things get out of hand. Another thing that you can do is check for a retest. This is very important. It's pretty much a touch of the resistance or support, and then a retest, and then a fall. And usually what happens is these kinds of lines need to be retested. And if it's not this one, certainly the 200-day moving average has to be retested. This applies for a lot of markets. It just gives confidence to investors that that support and resistance is a true support and resistance. One problem I see is the VIX being this low has, every time it's been this low, especially in the last couple of months, there's been a bounce up to 35 on the VIX. Is that going to be today? I don't know. It's really weird. Like, it could drop below 20, but it's just very, very common, especially in the last couple of months, last couple of years even, that when the VIX hits 20, it's very easy for it to pump back up because of an unexpected market surprise where the market did not get any protection by buying the VIX. Anyways, guys, let me know what you think about these kinds of videos. Thanks for watching and see you next time.